let's talk about something that has millions of people tapping a button on their phones every single day, the Pi network. It all started back in 2019, created by a couple of Stanford PhDs, Dr. Nicholas Kokalis and Dr. Chengdiao Fan. Their big idea was to make cryptocurrency mining, which usually requires powerful and expensive computers, accessible to everyone. All you would need is your smartphone. This simple concept was brilliant because it removed the biggest barrier to entry for most people who were curious about crypto but didn't want to spend thousands on equipment. The promise was simple: just open the app once a day, tap a button, and you could start accumulating Pi coins for free. This ease of access is precisely why the Pi network exploded in popularity. It built a massive community, with tens of millions of users, or pioneers, all over the world. The project fostered a strong sense of community and hope. People felt like they were getting in on the ground floor of the next big thing, similar to the early days of Bitcoin. The idea of earning a digital asset with almost no effort was incredibly appealing. It didn't drain your battery, or use a lot of data, making it a no-risk proposition for most people. They just had to remember to tap that little lightning button every 24 hours to prove they were human and keep their mining session active. The vision behind Pi wasn't just about easy mining, it was about creating a widely distributed and user-friendly digital currency. The creators wanted to build a platform that could be used for everyday transactions by ordinary people. The more people who joined the network, the more secure and valuable it would theoretically become. This focus on building a large user base first, before even launching a fully tradable coin, was a unique strategy. It created a huge amount of buzz and anticipation, with everyone in the community eagerly waiting for the day their accumulated Pi coins would finally have real, tangible value in the open market. So, you have this massive global community of millions of people, all patiently mining these digital coins on their phones. They've been doing this for years, watching their balances grow and dreaming of what those coins might one day be worth. The project has moved through different testing phases, and the excitement has been building steadily. Everyone is holding on to their digital stash, hoping that the founders' vision will come to fruition, and that their daily taps will translate into a significant financial windfall. But this is where the story takes a turn, from a simple dream into a world of wild speculation and confusing claims. Now let's get to the number that you've probably seen all over social media: $314,159 for a single Pi coin. It's a truly mind-boggling figure. If it were true, anyone who had mined just a few coins would be a multi-millionaire overnight. This number didn't come from any financial analysis or market valuation. It's a clever, community-driven piece of marketing based on the mathematical constant pi, which starts with 3.14159. It's a fun reference, and it created an incredible amount of hype. Many people started to believe this was a real future price target, a consensus value that the community would adopt. The problem is, this price is pure fantasy. It has absolutely no connection to reality. A currency's value isn't decided by a clever number or community hope. It's determined by supply, demand, and what someone is actually willing to pay for it on an open market. The $314,159 figure is a myth, a piece of viral marketing that has unfortunately misled a lot of hopeful miners. Believing in this price is like believing a stock is worth $1 million just because its ticker symbol is MONI. It's wishful thinking, and in the world of finance, wishful thinking can be very dangerous and lead to poor decisions. So, what is the real price of a Pi coin today, on December 16, 2025? It's a lot less exciting. Right now, Pi is trading for about 20 cents. That's 20 cents, not $300,000. To make matters worse, the price has been struggling. After a small rally in October and November of this year where it climbed to around 28 cents, it has lost momentum and is now trending downwards. It's actually getting dangerously close to its all-time low of about 17 cents, which it hit just a couple of months ago. This is the cold, hard reality of the market, a stark contrast to the wildly optimistic dreams fueled by the community. It is absolutely critical to understand this difference. The price you see on some exchanges right now is for IOUs, or paper Pi, not the actual coins you've mined. People are essentially trading promises of future Pi coins. The coins in your mobile app are still locked up. The current low price reflects the market's skepticism and the long wait for the project to fully launch. It shows that professional traders and the wider crypto market are not, at this moment, valuing Pi anywhere near the community's hopeful number. Ignoring this reality is a recipe for disappointment. The single biggest reason for this huge gap between the myth and the reality is the project's current status. Pi Network is in what it calls an enclosed mainnet phase. Think of it like a walled garden. Inside this garden, coins can exist and be moved between users who have passed the identity verification, or KYC process, but they cannot leave. You cannot transfer your mined Pi to a major exchange like Coinbase or Binance, and you can't cash it out to your bank account. Because of this, there is no official, liquid market for Pi coin, which is essential for discovering its true price. This enclosed system creates a lot of problems. First, it limits liquidity, meaning there aren't many buyers and sellers able to trade freely, which keeps the price suppressed. The few prices you do see are on smaller, less reputable exchanges trading those IOUs we talked about, which carry their own risks. Second, the long delay in opening the mainnet is hurting confidence. People are getting tired of waiting. The project has been in this state for a while, and with no firm date for a full launch, some investors are losing faith that it will ever happen. This uncertainty is a major factor pushing the price down. Adding more pressure, a significant number of Pi tokens are scheduled to be unlocked soon. Estimates suggest that around 180 million Pi tokens could be released over the next month. Basic economics tells us what happens when a large new supply of something hits the market. The price tends to go down, especially if demand doesn't increase to match it. All the people who have been patiently mining for years might rush to sell of their coins as soon as they can, creating massive selling pressure that could push the price even lower than its current 20 cents, possibly to a new all-time low. This is a make or break period for Pi Network. The years 2024 and 2025 have been seen as decisive. The project needs to prove it can move beyond its massive user base and create real economic value. It faces a big adoption gap, where millions of people hold the coin, but very few are actually using it for any real-world transactions. Until the mainnet opens and the coin proves it has a use case beyond just being mined, the price will likely continue to struggle under the weight of market skepticism and the threat of a huge supply flood. So, what needs to happen for Pi's value to actually go up? First and foremost, the Pi core team needs to launch the open mainnet. This is the most critical step. It would mean the walls of the garden come down, and your mined coins could finally be listed on major, reputable, cryptocurrency exchanges. A listing on a platform like Binance or Coinbase would bring immense legitimacy, liquidity, and exposure to a much wider pool of investors. This is the event that all pioneers are waiting for, as it would establish the first, true, market-driven price for the coin. Without it, Pi remains a speculative asset locked in its own ecosystem. Second, the network needs to see real adoption. People need to start using Pi for something. It needs to become more than just a number on an app. This could mean developers building applications, or dApps on the Pi platform, or businesses starting to accept Pi as a form of payment for actual goods and services. If you can use your Pi to buy a coffee, pay for a service, or interact with an app, it gains real-world utility. This utility is what creates genuine, sustainable demand for a cryptocurrency and separates successful projects from the thousands that have failed. A large community is a great start, but that community needs to become an active economy. In the meantime, you must be extremely careful. Because the official coins are locked, scams are everywhere. You will see websites, social media groups, and individuals promising to buy your Pi coins for hundreds or even thousands of dollars. They are scams. They are trying to get your wallet information, your private keys, or your personal details. Never send your coins to an unofficial exchange or an unknown person promising a high price. The only way to trade will be through official, reputable exchanges after the open mainnet is launched. Until then, assume any offer that sounds too good to be true is in fact too good to be true. Ultimately, the future of PiCoin is completely uncertain. It has the potential of a massive built-in user base, but it faces enormous challenges. Will it successfully launch its open mainnet? Will it get listed on major exchanges? Will it foster a real economy? Or will the price collapse under the weight of millions of users cashing out? No one knows for sure. That's why my advice is always the same. Be cautious, be skeptical, and do your own research. Don't invest more than you are willing to lose, and don't get swept up in the hype of a mythical price tag. Your financial future should be built on solid ground, not on a dream.